What's up, everybody? Matt here, episode 21 coming at you. Thank you, everybody, for joining me today. So excited to have everybody today. Why? Because we crushed it this morning. Now, usually I start with my wrap-up and I tell you a little bit about the market and the direction of the market and what's going on today, but we're going to do things a little differently today. First off, there is somebody who we have an app out. It's called 349trading.com. I give you market directions. I set off alerts. Real quick, my alerts, since I started this app, my options alerts. I am 44 victories and 14 losses. So I'm trading at about 75% of my option plays are making profit. How is that possible? Because we have a specific strategy about the way we average down with options. We give ourselves more time for expiration. We average down when our option position is down 40 to 50%. We have a specific way. It's all on my platform. I'm going to talk about some positions that I spoke about today. Why? Because unlike other gurus, I am here to be transparent as possible. I'm here to share my trades, my thought process, what I'm seeing in the market, and I give that to you. And hopefully you use that information, you use your own strategy, and you come up with the best solution or the best ideas or the best strategy for yourself. Remember, entry point is always most important. If you have the best entry point, and I'll give an example later, even when the market threw up on itself this afternoon, I found my options down 5%. Why? Because I snagged the best possible entry point. So let's talk about positions real quick. I mentioned all these positions yesterday. So for anybody following along, this is episode 21. If you don't know who I am and you don't believe and you think I'm like other gurus touting stocks, you can go back and watch episode 1 through 20. The episode 20, I mentioned specific positions that I'm in every day. I'm transparent as possible. So let's talk about APPS. All right, I sold my options position this morning. We planned ahead. So when the stock was up 4, 5, 6%, I exited out with 39% of my original position, and the options position that I averaged down, which I mentioned yesterday I got 131%. Let's move to eBay. eBay killed it this morning, made 166% on the options. Now, every option that I speak about is part of my alert. So if you think I'm making just 166%, that's not true. People on my platform are making 166% or even more. I saw 187. Usually people get in whatever option it is better than me. My last option play today was Carnival, and then the market threw up on itself. Carnival was $28.16. Now Carnival closed at $28. So we'll talk about the market throwing up on itself in a little bit, but let's just go into my other play. UVXY exited out this morning. 100% gain. SQQQ, I had the $13 puts that I paid 91 cents for, and I think I sold them for $1.17. So that was a 29% gain. Plug options, okay? If you look on my spreadsheet, you will see about 6 open positions for plug options in the positive, call options going forward. Remember, we bought the $27 and $28 plug options that were down like 80 and 90%. Great. How do we average out? Well, I averaged down by going out to June. I went out to September with my options. It's a safer play. I told you if plug takes longer to rebound, then we'll be okay. Now, the great thing about it is plug went up like 8% today. So another 8% day between Wednesday, Thursday, and Friday. Yes, our options will be miraculously profitable. What else am I seeing? Delta Airlines, Carnival. So I went into Carnival late. Delta Airlines I've liked for day. Those are both Dow stocks. So I do think the Dow is strong. The sell-off we saw at the end of the day is just people taking profit before the end of the day and testing the bottoms again. We've seen it now 4 times in the NASDAQ, and now we've seen it in the Dow. So let's talk about where we are in the market real quick, okay? Remember where we were? We hit the highs maybe like a week, 2 ago. Okay, and then we had the lows last week when we sold off, and the market gave back 4 or 5%. So where are we right now? We're directly in the middle from those highs and from the sell-off. We're directly in the middle, which is why the market is stuttering, which is why you saw tech go up this morning and be so strong and then sell off so strongly at the end of the day. Same with the Dow. You'll see the Dow down 200 points. It recovers pretty strong, and then it sells off back to 200 points at the end of the day. We see the same pattern every day. So why was I so excited this morning? Because we all got out of our positions this morning when I alerted that I was selling. I was selling my positions. I said, secure your positions. So here's the lesson. Plan ahead, all right? Anybody that doesn't know what that means, here it is. I'll give you one example. A gentleman in my platform had $300, one option cost him $300. He planned, he sold it at $420, and he made, 40% profit. And then as soon as he sold his option, again, planning ahead, as soon as he bought the option, he put in for a 40% profit. He fell asleep, he said. He said when he woke up, he sold the option and the stock had dipped back down. So what did he do? He re-entered the same position down 40% again. So not only did he make 40% on the same position, but he re-entered at the bottom again. So this is what we do. We sell at the peak, we buy at the dip. And somebody's saying, that's so simple. Anybody can tell me that. I know how to sell at the peak and buy at the dip. But you don't. If you plan ahead, as soon as you buy one option, it makes more sense for options because options are more volatile. So you buy an option. It costs you $300, let's say. One contract, you spend $300, okay? As soon as you buy the contract, you put in your order to sell at whatever profit margin you like. If you want 100%, you put in to sell that one contract at $600. If you wanted it 50%, you put in to sell that one $300 contract for $450. The point is, you don't have to stare at the screen. You don't have to do the math in your mind saying if it goes up this, multiply it by the delta, then it has to go up this way. You figure out if I bought it for $300, I sell it for $450, that's 50% gain. If you bought it for $300 and you sell it for $360, that's a 20% gain. $300 to $390, 30% gain. So you put in for whatever percent gain you feel comfortable with based on the risk that you're taking. The point is, you don't stare at your computer, you plan ahead. So this gentleman entered into the same position twice today, made 40% the first time, and now is riding the same position the second time. Let's talk about what else I alerted to. Nnox. I mentioned it 2 days ago. I mentioned we were seeing heavy volume in there, and it's usually demand volume. So what happened? I mentioned it again this morning when it was up 2%. Then it was up 6%. What did it do? It went as high as 15%. I think Nnox ended up maybe like 10%, 11%. Point is, there is demand. So what is Nnox, right? It's a nano company. They do 3D X-rays on your arms, your legs, your elbows, whatever it is. They're an Israeli company. So Israel's fighting Palestine right now. They're bombing back and forth, back and forth. That company got beat down. It was $24, back to $20, maybe even 19 and change. Now it's recouping. Before it got beat down, before this conflict started, that stock started to move. It started to move slightly, but I saw the demand. So for anybody new that doesn't know me, I track demand. I track volume. I see things like computers see them, okay? I don't use special algorithms like hundreds of thousands of dollars algorithms that these banking institutions use. Oh, okay, real quick, banking institutions. Guess what? Guess who follows me? There's some dude at Morgan Stanley that follows me. And there's not only going to be one person. If one institution or somebody inside one institution or a trading desk is following me, there are going to be more. Now, that's not to disrupt what we're doing as a 349 family. It just means that somebody's seeing value. So if you're new here, I charge $3.49 a week for my insight, for my alerts, for me going 74% with my options plays, for me going like 80 or 90% with my stock plays. So there is value here. Just because I charge $3.49 doesn't mean there's no value here. I charge $3.49 because I want it available to the masses. I want hundreds of thousands of people to follow me, to understand, to trade better, to disrupt the institutions. Now today, when we saw the market tanking today and there were people scare selling, people that were with me, we have money on the side. We know exactly what to do. If we jumped into positions at the end of the day on that dip and we planned ahead, great. If you didn't, guess what? I'm so excited for tomorrow because I actually have $20,000 of option money that I freed up today that I didn't use. Why? Because I have a rule. After I sell something, I wait 24 hours or basically enough time for me to cool down, relax, reset my mind, and figure out the best position. There's a rule, there's a lesson I talk about compounding your problems. So if you lose like 40 or 50% and then you sell scared and then you enter into another position that might even be similar, then you lose 40%. By the time you're done compounding your issues, your account in one day is blown up. You're down 80 or 85%. You're thinking to yourself, I'm never going to get back to 10,000. I'm never going to get back to 20,000. Whatever it is, it's crazy. And I'll show you some slides later. So the plan ahead lesson, zoom out lesson, okay? Anybody that hops into a position and then it goes down right away, let's say you hop into an options, like I hopped into Carnival and it went up real quick, it spiked and I was up 25%, and now it's down, I'm probably down about 12%. Do not get upset. You have to zoom out. Look at the bigger picture. So I talk about zooming out a lot. You can do it with your stock. You can do it with your option. You can do it as with market as a whole. You'll see what happened today and you'll say, oh, the market's going to throw up on itself at 3 o'clock. It just sold off. That's what's going to happen tomorrow morning. That's not what's going to happen. It was just resetting itself. So anybody that's new, right? Here's what happens. The market goes up. It thinks it goes overbought like this morning, okay? So your stocks are up 8, 9, 10%. what's going to happen? The market has two directions. Your stocks can either go from up 10% to up 16%, which some of you might happen, or up 10% back to up 5%, okay? Anyway, those are huge moves, huge volatility. The point is, your stocks can only go in two directions, up or down, or they can stay the same, but that doesn't happen. So they had one direction to go. When your stocks were so frothy this morning, most of them went down. There were some strong stocks like Plug, Jumia, Nnox that was pretty strong. Let me just talk about anything else I want to talk about today. No, because today I just really wanted to get to people, because if you're still in positions and you're still being hurt, and I know some of you are, and the premise behind this show, besides for me sharing and telling you what I'm seeing in the market, is really helping you out of positions, hearing your questions, explaining what you might be seeing in the market, and helping you out. I don't think anybody else on YouTube goes live without some type of pre-questionnaire that they have. I do everything live. I look at my phone. I share what I'm seeing. Why? Because I want to keep it simple for you. I want you guys to be able to look and examine and do exactly what I'm doing, and to see things the way I'm seeing, so you can figure it out for yourself. I'm not always going to be here telling you this is a good play, this is a bad play, this is good. Plus, I'm not a financial advisor. Oh, real quick, after you take some water. Bottom of the screen there. Please pay it forward. You guys, I get like 500 to 1,000 watches per video. Please, not only do you like this, subscribe. If you're not subscribed to my channel, the worst thing that could happen is you get alerted that I have a new video dropping about options or about something else. Subscribe. Pay it forward if you're making money off my platform, which everybody is, because we're killing it. And I'm not just saying that to be like one of those guys, yeah, we're all killing it, we're all making money. It's transparent. You see my spreadsheet. You see every position that I'm in. You see the stock positions that are down. You see when I double up on a position or add to a position. And then not only do I add to it, I give you an explanation of why it's going to happen. I'm not like some of these guys on YouTube that's like, buy this. And that's all they do. They go, this is the option we're buying. It's going to go up 300%. And they're talking to you like you're an idiot. Nobody that follows me is an idiot. You might be new at following the market. You might be new to trading. You might not understand about buying options, selling options, whatever it is. I have an options video like the bottom of the screen. If you subscribe, you'll see it. Okay, so let's get to some questions, because I don't really want to do any more of this today. I really want to help you. So everybody, I have some slides I'm going to show you real quick, and then we're going to get to your questions. If you have questions about it, it can be general questions, specific questions. If you have a stock question and you want to tell me your position, that's great. Okay, so plug options. This gentleman made what, 95% today. Just to show you, people in our platform trade with real money. This is one trade. This dude's trading. He's making $6,000. His investment's $12,000. Just because I charge $3.49 doesn't mean it's a cheap platform. What it is, again, is to disrupt the institutions, to teach you guys how to be better traders for yourselves. All right, everybody can improve themselves, even if it's entry point or the way you're buying contracts or the way you're entering into a position. I have rules, I have lessons. Go to the next slide, please. What do we got here? Okay, so Nnox, what was I showing you guys this morning? What I was showing you is I was showing you that volume was picking up, and you can see the large institutional orders over the past few days were spiking. So don't be surprised if we see some type of spike in that. And that's what we saw. We saw 15% out of that. So when you learn and when you see these big institutional buys, an increase in volume, it's all more demand. So it's more inflow than outflow. It will spike. There are stocks like that out there. I can talk about them during the Q&A. If anybody mentions them, I will support them. I'll say, yes, this stock is showing good. Okay, next slide, please. Yes, so I sent out a text this morning. The market was plus or minus 50 points or 80 points, yet we were killing it. People were saying, I had 4 trades today that returned 100%. People on my platform, everybody picks their own exit point, but people were killing it today, and that was what made me so happy. What else? I wasn't worried this afternoon about you guys. Somebody said I'm like a parent. I send you guys out to play, and I'm like, hey, you have enough money? You have enough this? Yes, I'm a worrisome person because we are playing with real money. All of you are investing hard-earned money that you got through working, that you got through scholarships, that you got through investment. Maybe the government gave you some type of money because you're unemployed. The point is, you need this money. So I'm teaching you how to invest properly. I only charge $3.49 a week because I want everybody to be on the equal playing grounds. I don't care if you live in the projects or you live in the nicest penthouse in New York City. It doesn't matter. Everybody's privy to the same information. Let me tell you, these companies, these institutions, like the ones that are following me, obviously, they spend hundreds of thousands. That was hundreds of thousands back then. They're probably spending millions of dollars on algorithms, on computer trades. That's who you're trading against. So the best thing to do is to see demand first, to get into that stock first, so we can beat them to the punch. Let's go on to the next slide, please. We're almost done with slides. Sorry, let's get rid of that slide. Basically, Carlos and I, my platform, we took in $132 today at that period. I'm not saying it to brag. I'm not saying it one way or another. I'm not doing this for the money. So that's the point I wanted to make. I'm not like other gurus. I'm not doing this money. I'm not trying to lead bag holders. I turned my Twitter private because there were people that were just wanted the information. They couldn't pay the $3.49 a week. I mean, I'm not asking for a lot. And again, 4% of everything we make is going to charity. So please pay this forward, share it, share the platform. You're in the elevator person talking about stocks, tell them 349 trading. Look it up on YouTube. It's free. They'll figure out how to get to the platform. All right, everybody. All right, let's get to some questions. Pretty excited. We have so much time today to get to questions, and hopefully I will get to everybody's. Again, you're in a bad position, share it with me. You're not sure what to do, share it with me. What I'm going to tell you is, what would Matt do if I was in that situation? And I've been in every situation. Your account's been down X, Y, Z. I've been there. You're down 80%. I've been there. You made 300% profit, but you didn't sell your option. I've been there. All right, still holding SQQQ alert. Are we going to have a dip before the end of the week? Yes, but if you looked, Alex, on my platform this morning, I mentioned that I was selling UVXY and SQQQ. I had the $13 puts. I paid 91 cents, and I think I sold them for like $1.17, which was like, what, 29%. So, yeah, you're still in there. Let's just say I didn't sell mine. You didn't sell yours. What happens at the end of the day? Again, Dow and the NASDAQ look strong today. People are testing. The institutions are testing the bottom. That's why they had the sell-off. What would I do? All right, Alex, say you're in this SQQQ and you don't want to average down for this week. Say you don't have the $13 puts like I had. Say you went a little lower and you're out of the money. Best way to average down is to buy the same puts for next week, okay? You wait till it spikes like it probably did now. We're at the end of the day. I'm just going to look it up. And I know the market threw up on itself. So the SQQQ is 1238, and it was as low as $11.89. So, yeah, it looks like it's spiking after hours, which means tech is probably down. I might wait till tomorrow, whenever the worst time is tomorrow morning. Like if tech goes down tomorrow, the worst time will be around 10:20 or 10:30 a.m., maybe 10:40. Plan ahead for the biggest tech dip, okay? It might even be 11. So I'm actually going to tell you to wait for 10:30 or 11 if tech goes down tomorrow. If futures are red and tech goes down tomorrow. So what are you going to do? At 10:30 or 11, you're going to look out to the next week, and you're going to buy the $13 puts. You're going to see whatever they're trading at, and let's just make up a number. Say they're trading at $100 per contract, okay? The fact is you're waiting for a dip, so you don't want to pay $100. You're going to say, when the market dips, I get the best price. I'm going to get in for 88 cents, okay? And again, these are made-up numbers. I'm not looking at it. But whatever it is for next week, you buy yourself more time, and that's how you average down correctly. Why? Because if tech doesn't turn around this week, and it only starts to turn around, let's say Thursday or Friday, let's say tomorrow's terrible, okay, and it slowly turns Thursday and Friday, you're buying yourself more time. So you might lose 30% on this week's options, but if you make 50% on next week's options, guess what? Net, you're up 20%. It's the smart way to do it, and it's the safe way to do it. Everybody that follows me, you see, I started buying options out extra months. So all my plug and my Neo options and my Delta options, they're killing it. Even Carnival, killing it. UVXY, I bought out to like June 8th, I think. Oh, no, that was eBay. Sorry, eBay. UVXY, I sold, SQQ. Anyway, all right, so you understand that one. Let's go on to the next question, please. I want to get to as many as possible. All right, thoughts on UVXY and the SDAO puts for tomorrow. It spiked end today. Yes, so it spikes end today. Real quick, for anybody that doesn't know, UVXY is the volatility, okay? So the VIX is volatility. UVXY, you multiply the VIX by 1.5. So whatever the VIX moves by, it's like if you can jump 10 feet, the UVXY moves 15 feet, 1.5 times whatever the VIX moves. So when the markets are unstable, and instability means not that the markets have to go up or down. It means when there's a huge drop, like at the end of the day, what was it, 2 o'clock, then they let it rebound, then they smacked it again at 3 o'clock, and then right before the markets closed. That means high volatility. That means the UVXY will spike. Okay, every time the UVXY spikes, I buy puts. Why? Because it always goes back down, and by the end of the week, the UVXY will probably be hovering around $4. Now, I'm not telling you to buy puts on open, but whatever it gets the most crazy tomorrow, if the UVXY spikes to like 460, 470, I will buy $5 puts. I like in the money. And then when it goes down 30 cents, guess what? I'm up 100% or more. So SDOW, SDOW, again, same thing. The institutions, the big money, they took their money, they took their profit today. Everything spiked 8%, 5%, 6%, whatever it was. Carnival was up 4%. Carnival ended the day probably down 1% or something to that extent. Yes, everybody took their profits. So what am I expecting? The same thing I tell you guys. We're going to see the same trend over and over again. Meaning, when there's a nice spike in whatever stock it is, make sure you secure profit. Plan ahead. I thought about carrying APPS forward. I thought about carrying my eBay options that expired Friday forward. But you know what? I was like, secure profit. Take 40%. It's hard enough to make profit. And the worst thing about not taking profit, it's my elevator example, right? So you're going up to the 44th floor. Point is, you're trying to get max value. Your elevator stops at the 39th floor. You're 4 floors away from getting max value. And what happens? The elevator goes back down. So rather than letting the elevator go back down, get out on the 39th floor, secure your profit. You wanted 100%? Sucks, man. Take 69%. Take 72%. You wanted 72%? Sorry. Take 36%. It's better taking the 36% profit than having your options go back down, because we know options move quickly, and being down 10%. Again, what am I looking to do tomorrow? I'm excited. I hope the market throws up on itself tomorrow morning. I hope it's off 300, 400 points. Yes, some of my positions will be hurt. But then I'm going to take all that money on the side and just stick it in the market and kill it. So if you're with me tomorrow, pay attention. For anybody not paying attention, okay? Say you're following me on public Twitter, but you're a member of my platform, and this is a service announcement, okay? There are 3 things to do. You email support@349trading.com. In the email, you write 2 things: your email address, then you write your Twitter handle. Then you go to the alert on the app, you find the private Twitter, and you request it. We're not going to request you. We don't reach out and go, hey, Joe, be a member of private Twitter. No, you have to request it. So there are people on the side, like 50 of you, waiting to get into private Twitter. You're not getting into private Twitter because you did not email support and provide the 2 bits of information: your email address, which is how you log into the website, and your Twitter handle. It's real easy. The guys are just frustrated. They're seeing these emails. They're like, hey, we're not in, but you don't say anything. You don't say anything more than we're not in. Okay, next, let's go on to more questions, please. You're working today, you bought puts and didn't have time to sell. Was it too late? So I'm assuming you're the UVXY. So you can average down. Okay, so if you're in the money, let's say you're making profit or you have a minimal loss, 10% plus or minus either way. You didn't have time to sell it and make your 100% this morning. So you're doing the elevator. You wrote it up. Now you're riding it back down. That's what you're doing right now. Best thing to do. If you're down 40%, you average down, okay? If you have 1 contract, you buy 2 more contracts. This is for any stock, okay? You're in some stock, you're in options, all right? Your option goes down 40 or 50% or 60%. You're looking at it right now, it's down 62%. You have 2 contracts, let's say you bought. So now buy 4 more, okay? Now don't buy them instantaneously, okay? You have to wait for the dip. You're still looking for the best price. You're looking for the smartest way to average down. The point is, there are specific ways to average down. They're on my platform. I can't go into them right now, but yes, UVXY, say you're down 40%, I would buy 2 more contracts. Say you're only down 15%, just hold tight. If you want to buy another contract, great. Say you're up 5%, just hold on to it. Point is, UVXY by the end of the week will be close to $4, okay? Volatility index. One thing's calmed down. Hopefully there'll be a truce in the Middle East. Hopefully the fires will be out in California. You know, there are all these little things that build up and make volatility spike. They're talking about Texas. They're talking about crypto. Crypto's getting crushed. So again, once things stabilize, the UVXY moves fast. You go see it spike to 460 or 470. Great. You turn around. When the markets calm down, all of a sudden it'll be at 434. We've seen it before and we'll see it again. All right, let's next one, please. Okay, if you're watching and not on the private platform, you're literally losing money. Yeah, thank you. I mean, it's the truth, and I don't want to make this like a commercial. This is like an update, me helping you guys out. But I told Carlos, I can't believe we're not at 10,000 members by now. Why? Because our plays are killing it. I'm educating you guys. You guys are making the smartest plays on your stuff. I love showing off stocks that I didn't give you. Stocks that you're like, yo, I used Matt's rules. I averaged down the right way. We had a green day this morning. I sold, and I went from people are showing me down 50%, down 60% to plus 60%. So if you're doing that at home, let's say you're minus 60% and you're going to plus 60% the same day, congratulations. You don't need me. If you're not doing it, yes, it can be done. You're like, well, bullshit, man. That doesn't sound, that's ridiculous. This guy, who is this guy? Sign on my platform. Pay the $349 for 1 week. Look at my spreadsheet. It has all my position, all of my entries. You guys get in better. Okay, so thank you for sharing that. Let's go on to the next question. Plug. May 21 calls. It went down towards the end. Should I take profit tomorrow morning? It went down with the market. It went down with tech. Tech was not killing it, but tech was what? Plus 50, 60 points. Then tech went from plus 50 to minus 20 points. Dow lost over 100 points, just like that in like a 2-minute span. So yes, you've seen the demand for Plug. Whatever options you're in for Plug, if Plug was going to struggle today, at the end of the day, when they sold off, Plug would have went back to up 2% instead of finishing at 8%. If it only lost 2% at the end of the day, there was strong demand, so it didn't finish at a high. Did you guys see what the markets did today? The markets were terrible. So if you're in stocks, I was going to talk about stocks, but I guess I won't. If you're in stocks and they held up good at the end of the day, they're up 4%, 5%, 6%. That's great. If you're in shitty stocks, like, for example, Coinbase, what? It loses 5% every day. I think there's value there, but I haven't bought in. It doesn't matter to me, but I see it every day. It's down 3%. It's down 3% after hours. It's down 4%. If your stock's held up strong today, somebody mentioned XL. Oh, Carlos mentioned XL. So Carlos mentioned XL. I think it was up as high as 14%. Maybe it finished up 8%. Yes, there's demand for green energy again. You know, it goes in waves. They shift it. Let's talk about AMC real quick. Again, when it was $9 and like 90 cents or 89 cents, I said to you guys, it could go see $20 before it sees $6. I used to say the reverse. I used to say they should do an offering. AMC is worth $6, but it's not anymore. Society is reopening. You take the mask off. You can walk around if you have your vaccine shot. Stores are telling their employees, hey, Walmart, if you have your, if you got your shot and you can prove it, you could be in the store without a mask on. Customers still have to wear it, but this is great. This is reopening. So again, AMC, yeah, it seems to go up like $1 every day. I know some of you have call contracts. Love's in there. I know she is. She didn't know she had call contracts. It's great. Congratulations. Plug. Yes, I love Plug. Again, look on my spreadsheet. I have September options, July options, May options. I have options up the you know what. All right, next question, please. I wouldn't take profit. I would let it go. Unless, okay, so here's the thing about Plug real quick. You look at the price right now and you say, will it be higher at any point later on in the week, right? So you say, even if tomorrow morning is rough, and I'm not saying it's going to be rough. I'm just saying there was strong sell at the end of the day. So even if tomorrow's morning's rough and Plug gets hit for like 2%, there's so much demand that if it gets hit with 2%, it'll probably rebound up 4%. So I would still be holding on to my Plug options. Again, now maybe the market decides it was thrown up on the end of the day and tomorrow morning it's going to spike up, which we've seen before. So don't be surprised if futures are up like 40%, 40 points. Now, why might futures not be up 200 points? Because why do they want to get the rug pulled out? Say futures are up 200 points. What's going to happen at open? They're going to sell off, pull the rug out. Everybody's going to start losing. There's going to be a snowball effect. So who the hell is going to bid up the market after hours? Certainly not me. Asia might do it because Asia has a mind of its own. When they sell off Asia like they did yesterday, the market goes up higher in the morning. When they buy and they push futures up, guess what? The market sells off. Wall Street does not like what Asia does. So what Asia does with our stock market, you'll watch it. 3 a.m., 4 a.m., very important. You're either going to see a spike or the reversal. The great thing is the market disagrees with it. All right, next question. Sorry for going back to the Plug. Extra time costs extra money. What about small accounts? Okay, yeah. Wouldn't you rather have a safe account? And if you only have, let's say, $400 or $500 in your small account, wouldn't you rather have that $400 be invested smartly? Meaning you go out to September, if you're not right about the option and you lose 10%, you're only down 10% and you're giving yourself till September. If you can't afford the extra time, you shouldn't be in options. If you can't afford to average down the way that I'm telling you to and the way that I'm teaching you to, meaning you buy one option, you buy two more, you need to be able to buy 6 options, okay? So if you're paying $150, you better have $900 for this option play. If you buy in for $150 and it goes down 50% down to $1, you buy 2 more. So now you're in for what? $350. If it goes down a little more to 60 cents, you buy 4 more. Now you're in for what? Close to $600. That's why you need about 6 times your initial investment. So whatever your initial buy is for Option World, say you put $1,000 into this option play. Guess what? If it goes down, you better have $6,000 on the side to invest and average down the right way. Why? Because if it spikes like it did this morning and you average down the correct way, you just went from minus 40% to plus 40%. So I mentioned this before, minus 30 to plus 30. How does it happen? That's how it happens. You have enough money to average down smartly. You have enough time to average down the right way. So even small accounts, yes, options are safe. Watch my options video. It's 14 minutes. I talk about the safe way to invest in options. I give one specific example. Delta Airlines, I expect to make 100 to 400%. It's a September option, so we have more than enough time. Again, it's in my options. It's free on YouTube. Subscribe to my channel. Watch it. It's 14 minutes. I think the screen is like orange. All right, next question, please. Let's get to a lot of questions. You're in SOS. I'm sorry for you. You have 115 shares at 642, and you've been waiting to get out, but it's so hard to catch out at 48%. Okay, so here's two things you could do with SOS, okay? Let's say SOS is $3 right now. And again, it might be a little higher, but last time I checked, it was around $3. So it's at $3. Say it spikes 10% this morning, which I don't know if it did, but other Bitcoin crypto plays I'm in spike 10%. It spikes 10%. It goes to 330. You know what you do? You sell your shares. Why? And you look at SOS again, and if it's back at $3, then you buy the same number of shares. What did you just do? You just lowered your average cost by 30 cents. If you do it 10 times in the course of a month, right, you're still long SOS, but every time it spikes 30 cents, you sell it. You do it 10 times in a month, you just lowered your average cost $3. Instead of $6.42, your average cost would be $3.42. EBON, I'm carrying big bags of EBON. And yes, I think EBON's going up. It was as low as $2.50, then it based at $2.80, then $3, $3.10. You know what I do every time it goes up? Every time it goes up 20 cents, I sell and I buy it back cheaper. So let's look at SOS real quick. And I'm sorry, everybody, it's pretty windy out here. Let's go to SOS. I don't have it on my watch list. Why? Because it's been heavily shorted because they're mining Bitcoin. Okay, so it's 337. It's 339. Let's look at the chart real quick on SOS. It looks like it's turning around. So just so you guys know, Mara, Riot, SOS, BT, CAN, whatever you're in, NCTY, all these Bitcoin plays, all right? First of all, they look like they're reversing, but that's not it. So pay attention real quick. Bitcoin, 20 million Bitcoin is going to be released to the public. I have a Bitcoin video. Watch it. 18.5 million of it's already been farmed and released to the public. They don't need computer algorithms solving the problems. My point is 82% of Bitcoin has already been farmed. So you have all of these companies, SOS, FTFT, BT, Riot, Mara, they're all farming Bitcoin, right? So Bitcoin price is going down. I don't care that tech's going back up. It worries me. So the way to play that, EBON, FTFT, every time it spikes 20 cents, sell it. Let it drop down, buy the same position. I don't care if you have 100 shares or 200 shares. You do that 10 times, and you're going to lower your average cost, okay? If I had time to do that on my account, I would do that for you guys just to show you. But I'm so freaking crazy busy. All right, next one. So the other way to do it is you could average down. You're down 48%. If you have conviction in SOS and you think it's going to rebound, the option number 2 is you average down. You buy 115 more shares, and you cut your average price to $4.50. Or you buy 230 more shares, and it's $3, let's say, so it's $12, and your average price and then becomes $4 and about 14 cents. The point is, you're a lot closer to break even. You get a spike on one day. Remember when the Reddit boys were playing with SOS, and you guys saw the spike from $4 to $6, and somebody said, what do I do with my SOS? And I said, it's a gift. If somebody gives you a gift, for some reason, if you're an SOS or any other stock, and it spikes 40%, let's bring back Romeo. Remember Romeo Energy, Romeo Power? It spiked 60% one day. What did we do? We sold. We got the hell out. And then what happened to Romeo? It dropped 45% since. So again, if somebody gives you a gift, if SOS, FTFT, any of these spike for you, if you're stuck in Mara, sell it when it spikes. Buy it when it dips. It's a great way to increase your portfolio. It's pretty safe because you know what you're worried about? You're having FOMO, fear of missing out. I sell it at the peak, and what if it goes higher? Guess what? It doesn't. We all think that. We're all so freaking greedy. If you're greedy, please like this video. If you're greedy, please subscribe to my channel. All right? I know we're all greedy. We see 40%. So this is what I'm teaching you guys. So if the only thing you take from the video is plan ahead. Whenever you buy whatever option it is, if you're day trading, plan in advance to sell it. You buy an option for $2, you want 40%. As soon as you buy for $200, put in the sell order for $280. Now, I don't care if it's a put or a call or whatever. Just make sure you're buying, you're opening a call option or a put option, and you're selling to close. A lot of you text me on the side, hey, what am I doing? You're trying to sell a call option. It's telling you have max loss. If you don't know what you're doing in options, watch my video, but you need to know what you're doing. You don't want to enter into the wrong position and just get screwed, and then you're a day trader and you make 3 trades and you lock up or restrict your account. Not going to happen. Please don't do that. Next question, please. Okay, what should I do with Tiger options? I did not average down, so I'm down 77%. It's okay, so real quick, you didn't average down and you didn't take profit, okay? We've been talking about these same May 21st Tiger options for over a month. So for over a month, the stock was $15. It went to $22. People sold along the way. When it would dip, you would re-enter. What you're doing is you're becoming like a bag holder, a watcher. You don't want to be a bird watcher, okay? You want to be an active trader. Now, I'm not telling you you have to have a lot of money in your account. what you do when this goes up, you sell it and you buy the same one down. Okay, so let's talk about your position right here. You're down, let's say 80%. So that's like $1. That's like $2. So it's probably like what, 85 cents, and you bought it for $2. It's a great question. If you asked me last week, what would I say? I don't know where Tiger is. I'm going to look where Tiger is. It was 1650. Then it crossed 17. I think it made its way to 18 today, but it probably went back down during the sell-off. So I'm going to guess. Always too late. I'm going to look. Okay, 1742. So it still went up 2% today. And keep in mind, the NASDAQ threw up on itself. There was more selling outflow on Tiger than inflow. So I actually still really like Tiger. In fact, I'm looking at the chart right now. I really like it, and I think it's going to go higher this week. And you need it to go what, to over $20? That's not going to happen. So what would I have done today? Well, when it dropped below $17, let's say $16.99, you plan ahead. So you look for June. Let's say you went for June 18 call options, the same $17.50 calls. You could have bought them today. Let's just look, because I'm going to do it for you so that it's informative. Okay. So you go out 31 days. 17.5 calls. They were as low as, let's say, $2 today, okay? So you buy some, right? They were lower than that, $1.95. But let's say you buy some for $2. So what you do is, let's say you have 5 contracts for this, okay? You buy 10 out the next month. 10, you double your investment. If you have 1 contract and you're down 77%, you buy 2 more, but you do it for next month, for June. Why? In case Tiger doesn't rebound to $17.90 or $18.90 or whatever it is by Friday, but it happens next week. Because these institutions, the same ones that sell you these call contracts and these put contracts, they hold certain stocks down. So if the market tanks at some point, they are on the other side saying, let's push this stock down. So it doesn't surprise me that it's right around $17.50 right now, $17.42. So there's going to be a fight. The good news is, if tech recovers, these options you'll probably be able to salvage $2 out of them. And if you average down buying options out the next month, the great thing is, if you salvage, let's say $2 and you lose 40% on these, the ones that you bought for $2 that for next month will probably be closer to $3 or $3.25, meaning you'll make 50 to 60% by the end of the week. So these will be down 40%. Those will be up 60%. It's the right way about averaging down. Now, what you don't want to do is throw good money after bad. You're down 77%. You don't want to say, these are so cheap, I'll buy 10 more contracts. Because right now, if the stock closed today and it was Friday, your contracts would be worth absolutely zero. It's $17.42. You have the option to buy at $17.50. So technically, your options are worth poop. Okay, so we don't average down that way. We go out an extra month. We go out extra time. We can buy the same strike. That's fine, but you have to invest more. If you put $500 into this initial position, you will put $1,000, times it by 2, multiply it by 2. If you put $2,000 in and you're down 77%, put $4,000 in. All right, if you're down $200, put $400. I don't know the size of your account. Again, I know some people are playing with $500, and I saw somebody who's playing with $250,000. So again, lots of people follow me, different things. I'm not a financial advisor, but please share this. Share this. If you're not on my platform, if you are on my platform, do me the favor, pay it forward, share this video, share the link, tell other people to watch some of my videos. They're crazy cool. Everything I do is not for money. I'm not loading it up as I showed you guys. Carlos and I don't rake it in, but I have this concept in my mind that we're going to disrupt the institution, that people, hundreds of thousands, if not 1 million people, will be trading following Matt's rules at some point going, dude, did you get that? We averaged out for 4 straight days. We did it. We're green. All right, you got CCL options, 65 cents based on volume demand. Do I see it bouncing? Yes. So I bought the same ones. I think I paid 69 cents, and then I paid, I think, as low as 59 cents. So I already averaged down. I break the rules, okay? I break the rules. Sometimes I suffer. But I really like Carnival. I really like Delta. Would you average down on these? Not yet, because they expire Friday. If you have Carnival options like I do that expire in September, say you're down. Now, mine were up over 100% going into today. So, and then Carnival went up today, even though we thought we were calling the bottom at $28.12. It's now at $28. So, yeah, I think you're fine. If the Dow throws on itself tomorrow and goes down 280 points, you know what we'll talk about in the morning? We'll sell out of our position and we'll buy it back cheaper. If the Dow goes down, let's say 200 points tomorrow, and I figure it out before the market opened like I sometimes do, and I share it with you on Twitter, I'm going to say, my Carnival position, I'm going to sell it on market open. I'm going to hope to get what I paid for it, maybe a little lower. All right, you plan ahead. And why would I be selling it if I'm strong Carnival or Delta? Why? Because if the market's going to tank 200 points or 250, I'm going to buy back $1 cheaper. I'm going to buy back 40%, 50%, 60% cheaper. And what am I going to do? Increase my portfolio. Now, I'm not telling you that's the plan. I'm saying always have a secondary plan. It's like playing chess, which I don't do. I like checkers. I'm a simpleton. But always have a plan. Always have 3 different moves, okay? If this happens, I'm going to do this. If this happens, I'm going to do this. And if this happens, I'm going to do this. And then you say to me, well, I can't watch the market. You know, sometimes I put in 2 orders on the same option during the day. Let's say it's CCL. I'll put in my sell option, my sell order. So I have 32 contracts, and I'll sell them at $1. Right now it's 65 cents. That means I'm making 50%. I will also put in an order to buy the same contract at 40 cents. That way, if it dips down 50%, all right, I don't know what it's going to do, but if it goes down 50%, I'm going to buy. If it goes up 50%, I'm going to sell. Point is, you can enter 2 orders at the same time. One sell, one profit. If the one happens and you take profit, guess what? You cancel the other one. If you average down, right, now you have double. You can cancel the sell order, and you could reevaluate, because instead of being down 60%, you're only down 30% because you average down the correct way. So everything's a thought. Everything's based on improving your portfolio. So if you're following me, understand that. I don't care if you have a small portfolio or a large portfolio. Everything you think about should be trying to help and better your portfolio. Next question, please. Light bulb moment. You finally averaged down on options. You can't believe you didn't get it before. It's simple. It's simple. And the safest way is, so somebody showed me their position and they were down 90% in this options. And then all of a sudden they bought 40 more contracts at 10 cents each. So it's only $400. And they're like, how is that? I averaged down. And I'm like, no, you're throwing good money after bad. If your contract is only worth 4 cents, 8 cents, 10 cents, guess what? It's probably going to be worthless. Now, somebody else, get my alert, right? And I say, if I pay $91 per contract and you think you're going to buy the same contract and you see it at trading at 5 cents or 3 cents, guess what? You picked the wrong contract. I have someone say to me, hey, I thought you bought these puts, but you didn't. You bought a different strike price. If I pay 90 cents and everybody else is paying $90, let's say, you're not getting it for $30 or 30 cents or $3 or 3 cents. The point is, you're picking the wrong contracts. You're picking the wrong expiration. Everything has to match. Sometimes there's movement. So yes, there'll be plus or minus 10 cents or 10%. But if you're off in something I give or other people are talking about, you're off by like 30%. You're trying to buy something they're talking about they paid $500 for, and you're going to buy it for $100. Guess what? You're probably on the wrong side of the contract. They probably bought calls. You're buying puts, vice versa, expiration date. Be very specific when you look at that, because you don't want to screw yourself. Somebody real quick told me they were following something that I thought about. They bought 10 contracts, but they were cooking dinner or they're cooking lunch for their kid, and they bought 100 contracts. And then they averaged down, so they bought another 100 contracts. So the dude only wanted to buy 10 contracts, worst case in for 60 contracts. By the time he was done, he had 660 contracts. All right? The guy blew up his account because he wasn't paying attention. So please, people, we're playing with real money. And I say playing. It's not a playing field. It's not a game. We're investing with real money. That is why I do this, because there are 30 million of you out there. If everybody played with, let's say, $1,000, that's like $30 billion, okay? The institutions are stealing from you. The institutions are cheating you. The institutions are robbing you. That's what they used to do when I worked for the institutions. They had different games. Now they play it differently, and what they do is they scare sell you. They come out with these reports, these lawsuits, these short reports. Then you see legal battles on your stock. Oh, you have 3 more days to file a class action suit. They're all bullshit. Do not get fooled. Are you kidding me? It's ridiculous. Next question. Let's move on to some questions. I'm sorry. Sometimes I get carried away. Again, I'm very emotional. I care about you people. You guys are like family to me. You're watching me. I answer questions because I like this. Fear, if Fed is speaking tomorrow at 2 p.m., do you see another huge tip? I don't know. It really depends what the market's doing tomorrow. It would not surprise me if the Fed, but we're talking about inflation. There's inflation overseas. People are worried about inflation here. If there was no worry about inflation, stocks would be off the chart. So I believe what's happening in the market, why we're seeing these huge tips, is people are being marginalized. What does that mean? There was a lot of borrowing to invest in the stock market. So what are we seeing? We're seeing margin calls. We're seeing equity calls. We're seeing people sell off. We're seeing all these kind of things. When people adjust their margins, so you can't borrow $8 billion anymore. You have to borrow a certain percent of what you have in the bank or something like that. It will settle down, okay? There are specific stocks. There's this stock pickers market. You have to be very good at what you're doing right now and what you're seeing. There are stocks that are going to do very well in the next couple of months. But there are stocks that are poop and aren't worth anything, and you're going to lose money, okay? So please, you have to be very cautious. Look for your stocks. Look for your entry point. Have a reasoning behind it. All right, so let's go on the next question. I don't know what's going to happen tomorrow until I know what's going to happen in the morning, overnight. SQQQ spikes tomorrow morning. Sleepy Joe came on, and I bought calls. I was working. I couldn't get any earlier. Okay, so I mentioned Sleepy Joe. First of all, I have no political affiliation. I just know that when the market comes on, Joe speaks or Jay Powell speaks, and the market tanks. So anytime you know that the Fed's going to speak or something, just assume it's usually like 2 p.m., 1:30, 2 p.m., 2:30, and then the market just falls. Again, I think the president spoke today, and the market fell. If I knew that, I would have sold my options. I would have bought back in. It seems like the easiest thing. Again, keeping it simple. But yes, it was working earlier. I bought a $12 strike. Yeah, you have 70 contracts. Okay, so that's a nice investment. What I would do, pre-market, you bought it 48 cents. I would put in an order to sell them around probably 65 cents, 17 cents is about 30% profit. I'd put in an order to sell them at 65 cents. Now, you go to work, you don't worry about it. The market spikes or it dips hard at 10 o'clock or 10:15, like I said, and then it recovers quickly. You don't have to worry about it. Secure your profit. If you want 100%, you would try and sell them for 96 cents. I don't think we get close to 13. I think we get probably closer to 12.60 if it goes there, maybe 12.65. The point is, somebody will pay the extra time, the extra $5 for your option. I would sell them at 64. 64 cents would be what? 16 cents. That would be 33%. That's what I would sell them for. 33% gain. You don't have to watch it. You don't have to do this. If you see you're off and the market starts going up, the Nasdaq's recovering, then I would get out and try and sell them for any type of profit. Next question, please. By the way, that's a lot of contracts. 70 contracts that expire this Friday. If we're doing it safe, you always give yourself extra time. He's obviously a more accredited investor. He put a $3,500 position. He probably trades an account 10 or 15 times that, meaning $50,000 or $60,000. You do not want to put all your eggs in one basket. If you have a $1,000 account, you don't want to buy $1,000 of calls or puts and have it go down and you're down 50%. You can't average down because you don't have money on the side, okay? I've spoke about other episodes, episode 17, episode 14, okay? The live episodes, 14, 17, 3 is good, 8 is good. Watch them if you have extra time. It talks about averaging down, saying you don't even have money. So one of those episodes, 17, talks about, I don't have money. How do I average down? Well, you have some stock. You have some options. Which is most important, okay? That's what I teach you. Episode 17, episode 18 was good. All right, thoughts on Walmart. So, yes, I was going to talk about that. Earnings. So I have it in here. A couple of different companies came out with earnings, and they all crushed it, and only one of them was decent after hours. I think it was Walmart. So, yeah, it's just tough. Earnings are always tough because institutions have one thought process about earnings, but Walmart's a good company. So let me see what Walmart says. Can you put that question back up? I don't know where it is. Walmart. Okay. There it is. WMT. Okay. So there was huge selling today, huge outflow. And what happened? The stock went up. So the stock was going up because retail traders wanted to get in on the stock and institutions were selling. So again, how does the stock go up when there's more outflow? So this is a great example, okay? The stock's going up on news or anticipation of earnings, all right? Walmart's going up and more people are selling, all right? Meaning they're selling to the bid. They're selling to the bid. The outflow is there. They're pushing it out. I bet there were huge positions that went out today. Let's go to the bottom. Let's see. No, there's more inflow by 1,000. Okay, so yeah, Walmart, expensive stock. Let's look at the 1 month real quick. 1 month looks great. Let's look at the 3 month. Yeah, I mean, Walmart looks like a safe play. And where could it peak to? It could peak to about 155. If not, it could break out of that. If it breaks over 155, I could see 175. It's at $140 right now. So that's about what? 20%. So yeah, I'd be holding on to Walmart. Next question, please. This is tough. Again, you're asking me to predict TQQQ for tomorrow. So you're asking me to predict what's going to happen in the market. So if I was to base it on what we saw at 3 p.m., I would say sell-off. However, you know me, I'm a contrarian. So I'm thinking one of these sell-offs was like the V. So when we capitulated at 3 p.m. or 3:30 or 3:50 p.m. and it went down, I think we're going to spike back up. That's just me. Of course, I think there's going to be a double dip sell-off tomorrow. So I'm hoping, you want my prediction? Okay, futures are off 30 points or they're up or minus 30 points. What happens at open? We spike up to plus 80 real quick. Then the market sells off to minus 40 real quick. And then we bounce back and have a decent day. Nothing ridiculous because every time there's profit to be taken, they take it. And we see that sharp cut right down. All right, let's go to the next question. I'll give you guys updates tomorrow as I see that. Is trading options always this hectic? It's not hectic if you buy out a few months. Please watch my options video, the one I do separate from the updates and live. We dropped it on Sunday. It talks about the safe way, that there are 4 misconceptions to options play, that you have to be extremely sophisticated, that you need a lot of money, that you need to be really smart, or that they're very confusing. They're all misconceptions. Watch my video, subscribe. All right, next question, please. Let's get to as many as possible. I know we're doing pretty good. With my options that are expiring this Friday, are you not worried about theta eating into my profits? Do you think there'll be enough of a move that theta is not an issue? It depends what options they are. Again, the ones that expired this Friday, the only options I have left are plug. And right now my plug options are still down, even though plug made a really strong recovery. Why? Because when I averaged down a plug, I went out till September, I went out to June. So those options are killing it, but the ones that expire on Friday are getting beat up a little. I could have sold today and sucked up like a 40 or 50% loss. I don't want to do that. I want to fight with plug. Again, if the market turns around, we got 3 more days. I know plug can gain 10%. So if we have plug at $27 and it gains 10%, that would be $2.90. That would be up to what, $29.90. That would be excellent. I'd be green. All right. So all I need is 10%. All right. Next question, please. IV eats away at it. Yes, IV eats away when your options expire on Friday. This is close to the options expire. That's when the IV eats away. That's why I tell you guys, in the money. You have Square calls at 242. That's not very good because Square's at like $205, right? So right now you're down 70%. Will it move up? What's my advice on that? So I'm not going to tell you advice if you're going to move up or not. I like Square and PayPal. They're all going to be bigger than Visa, Goldman Sachs. They're going to be worth more money. So yes, I like Square long term. So what would I do? The same thing I'm telling everybody else. I would look out till September. I think Square was at $200 this morning. So when Square was at $200, I'm going to look what it is right now, but that's my guess. When it was at $200, I would have bought the $205 or $210 calls in September, maybe even the $220 calls in September. Why? Because if it doesn't move by June 4th, but it moves in July or August and they come out with earnings and they crush it, the stock will be at $270. And instead of being absolutely broke because your options expire June 4th, that's the right way to average down. So I don't know how many call options you have. Let's say you have 2 options that expire June 4th. What are you going to do? You're going to buy 4 or 5 for September, okay? Let's look at Square. And you have to do it when Square is going down. So let's just see where Square is because I know it was sub 200 today. Let's see. And that's when you should have bought it. Yeah, it went to $199.73. And it was as high as $209, and it finished at $203. So you're down this morning, okay? You're down. Square goes under $200. What are you doing? Instead of talking to me or texting something, you should be buying call options out for September. Why? So when it rebounds $3 or 1.5%, already you're up 15% on those. So you're down 74% here. If you had bought this morning, you'd be up 15%. Now, the great thing is Square didn't finish at $209. It finished at $203. So plan ahead tomorrow. Whatever you bought here, 2 contracts, buy 4 contracts for September. If you bought 5 contracts here, buy 10 September contracts. Buy closer to the money. 242. Where'd you come up with this number? I mean, I'm looking at Square. 242. Let's see where it's been 5 days ago. It was at $220 5 days ago. So it was never at 242. It was so far out of the money. I like in or out of the money. I would rather you have $220 calls, and then when you get to averaging down, you're buying the 200 calls. It just makes more sense. Out of the money calls, somebody asked me to explain, are more risky. You're assuming more risk. They're worth less money because they're out of the money. You need major movements, whether it's to the upside or the downside. You need big movements. I like in the money. Why? Because instead of buying stock, I'm investing, instead of $1,000, I'm investing $200. And if I'm right about the movement, I'm going to double my money, make 100%. If I put in the $1,000 and I'm right about the movement, I still would make $200. So I make $200 either way. But this one only cost me $200. This one cost me $1,000. It's the way to marginalize, investing. I don't have $5 million to invest. I have, a couple, whatever I have. All right. Next question, please. All right. Tesla, 28th of May, 652 call options. You bought 2 weeks ago. You have 4 contracts and you averaged down to 16. Current price is $3. You have 14,000 on the side. You'd be throwing good money after bed. Tesla's been struggling. So here's the thing about Tesla. Real quick. When you have these options and you bought them 2 weeks ago, we've seen Tesla spike 3 different times. Now, how do I know that? Because I've mentioned to my members, I have played Tesla 3 different times, and each time I've been the winner, and they've all been calls. So Tesla spikes $15 or $20. You know what you do? You sell your options. So your $3 options, when it spiked earlier today, maybe you got $5 out of it or something like that. So you sell them. Then when it goes back down, end of the day, you buy the same ones again. There are ways to trade it instead of being a watcher and saying that you're down 14K, which sucks. Somebody else mentioned to me today they were down over 20,000 in Tesla. So again, and Tesla is a tough company to bet with or against because there's so much money that has to be involved. You basically have a banker on this side, a hedge fund on this side, Dr. Michael Drury on this brewery, whatever, Blowery. He's selling. I'm sure he's selling it too. He's very good about manipulating stocks. So again, I would be more scared with Tesla. I would not average down. You're down that money. Find a way to make it back on the side. If you want to buy Tesla contracts, that's great. But you're going to have to spend a lot more money. You'd have to spend the $14,000. And if you're wrong about it, guess what happens? So say you're wrong about it. You currently have $1,200 right on here. If you spend the $14,000 and you're wrong, your $14,000 will go down to about $3,000. So now you'll be like, you'll lose just a ridiculous amount of money. I mean, I can't even imagine. It'd be over $20,000. Play safe. If Tesla beats you once or twice, stay away from Tesla. I own Tesla, which is why I battle Tesla. I own Blink, which is why I battle Blink. There are stocks that I own that I just own, meaning every time I invest in that stock, I'm correct on that stock. When I mentioned WYNN, I traded 83 times last year for a 2,500% profit. Know a stock like family. If you don't know Tesla, you get stuck. So you bought these 2 weeks ago. You could have sold on the spike, bought back contracts on the dip, sold on the spike, bought back on the dip. It sounds easy. I know it's hard. You see Tesla spike $15 and you're like, maybe it'll run $50. That doesn't happen anymore. If it spikes $15, sell. If it goes down $15 or $20, buy. All right. There's a simple look at the range for Tesla. Let's go on to the next question because a lot of people can't afford Tesla, so I don't want to harp on it too long. Hey, Matt. Trump. TRUP. All right. TRUP. I don't know the stock. So TRUP. Obviously a tech stock. It's an OT. No. TRUL. No. Okay. TRUP. It helps when I can spell. All right. So we got a $76 stock. We're going to look at the 1 month real quick. Okay. So this chart looks terrible for the 1 month. I would get out of this stock if I was in this stock. Even when there looks like to be more inflow than outflow, the stock price still goes down. I'm just going to look at the 3 month. They've been down since earnings. The 3 month looks terrible. It's down, 27% in 3 months. I'm going to look at the 1 year. Yeah, this stock does not look like one I'd be in. So, yeah, James, if you're in this stock, I would try and sell when it spikes maybe tomorrow. Let's see what it did today just to give you an exit. It went down 77 cents. It was up to $79. Yeah, I mean, it would have been great to take that profit this morning. It was probably up 4%, and you went from up 4% to down 1%. So don't get greedy. In this market, I don't care. So I haven't spoken about stocks that much. In this market, if your stock spikes 4, 8, 10%, sell it. If you think the market's going to sell off the end of the day, you can buy the same stock when it's up 2%. Save the 8%. And people say, what about wash sale and accounting? I don't worry about that. I want to be profitable. I want to make as much money as possible. So if you're telling me you're not going to sell something because it's tax purposes, great. You lose a quick 6%. I don't care if you have a $1,000 or $10,000. Let's say you have $10,000 in your account. You want to lose $600 for doing nothing? Say you have $10,000. $600 is still a good chunk of that. You lose $600 5 times. Now you're down 30% on your account. Yeah, it's all mathematics, okay? I don't want to lose anything. So if I see something going down, I'm going to sell. If I see something peak like APPS this morning, I sold my options at like $3.30. I made over 100% on one of them. I made 39% on the other one. And then you know what happened? It went all the way as high as $4.20 per contract. So I could have got 90 cents more or 30% more. Instead of looking at it like that, it probably went down when the tech fell the end of the day. So you don't look at it that way. You put in an order. You try and get max value. It's risk versus reward. You limit your risk. Okay, so let's go. Next one, please. FEYE. Oh, that's like something that has to do with eyesight, right? Let's see. There's Fire Eye. Yeah, Fire Eye. Okay, excellent. So this I know is like I don't know exactly what they do. Yeah, the stock looks great actually. FEYE. I'm adding it to my watch list. Why? Because Inflow's been crushing it since $19.40. So that's about $1.40. So that's about what 7%, I guess. So yeah, for the past couple of days, FEYE, I'm going to look at the 3-month chart and let me tell you what it looks like. Okay, unfortunately now the 3-month chart makes me more worried. Why? Can you see the chart? Let's see. There it goes. Because we're at the peak. Every time it peaks like that, it dips back down. So I don't care that there's demand. There's demand every time it peaks. Now, this time is different. There's been strong demand for 4 days in a row. Usually there's some outflow when it's peaking like that. So right now, yes, stop loss on this one. You have stock, great. It goes up, $1, stop loss, move it up 40 cents. It goes up 20 cents, stop loss it up. So yeah, I would be holding on to this one. Next question. I would be scared though. If it falls hard. So very careful on that one. Next question, please. All right, my UVX started right before the end of the day, being green all day. I hope they don't continue your recent descent. Okay, so the UVXY is very volatile, so it measures volatility. Yes, when it moves and the market tanks, it spiked at the end of the day because there was a huge sell-off. There was huge scared. Anytime you think the people are scared of the market, the UVXY will spike, okay? Anytime the markets come down, it goes down really quick. So yes, right now it's spiking. If the Israeli conflict tensions bound overnight, if the California wildfires expand, they could spike. But what happens when the market settles down? Say the market turns green and they're up 40 points here and 50 on the NASDAQ. The UVXY goes down, and it goes down quickly. So I'm looking for $4 by the end of the week. I don't know what's going to happen. Next question, please. Neo, May 21 calls. Yes, but you didn't tell me where your calls are at. If you have a $33 call, let's look at Neo real quick. Again, Neo is green energy, like plug, like this. There's been some demand for the past couple of days. However, with the market being as shaky as it is, they tried to push Neo above 35 a couple times, 35.50 the other day. Neo's at 34.19. The good thing is, if the market is stable and there is demand in the market, now I'm not saying it has to be a banner day up 200 points or something like that, but let's say the market's just up 40 points, 50 points. Neo will excel that, meaning if the market's up 1%, Neo will be up 2%, 2.5%. There is demand for Neo stock. Neo is a heavily shorted stock. When it starts to move, it's going to move hard. So yes, I like Neo. I think it's a great play. I own September Neo options. I like to be transparent. It's on my spreadsheet. AMAT. So I mentioned Applied Materials at 126. We got in. We sold at 139. I had a higher price target on it. Then what happened? It went back under 126. So when I sell something, just like Canadian Solar, I sold it at $46. I made the alert. Then it went down to $37 or something like that. So if I sell something, it's for a reason. Applied Materials, I think there has been demand, but there's demand real quick. This probably looks like the other materials play, and I know like FCX, CLF. I think it's a good long-term play. It's $121. I'd probably go with stop loss on this. If you're correct about AMAT, A-M-A-T, it'll probably go up to like $140 to $4 or something like that. I'd probably claim like 18 or 19% out of it. If you're wrong, I would put a stop loss at maybe $112, which would be a 7% to the downside. So again, I think your downside's limited to like 7%. I think your upside's limited to maybe like 18 or 19%. But I'd rather be invested where there's more upside than downside. It's a materials play. I think the materials stocks are getting beaten up. If you look at Cleveland Cliffs, if you look at FCX, if you look at like X, the steel company, again, when Biden starts passing these things and we're investing in America and rebuilding bridges, all these material plays are going to go through the roof. All these green energy plays through the roof. It's coming. It's coming. I'm going to figure it out. Hopefully the market tanks. We figure it out. We hop in and we ride it up. All right, next question, please. Oh, I see it already. Wint. So Wint can move. I looked at it the other day because I know some of you are stuck in there, right? Windtree. The volume picked up. You got to understand one thing about this stock. There are so many bag holders because when you guys buy stocks that are $1.79, I know people that are like, I have 5,000 shares at $4. I have 10,000 shares at $1.20, whatever it was, and it keeps dropping. So yeah, there are going to be tons of bag holders. Oh, actually, a lot of bag holders left. Yeah, this one can move. There is demand. It could move. I'm assuming it has a low float. That's why you guys are here. 26 million share float, market cap 47 million. So it's basically a worthless company. So if they have earnings, I don't know if they do or not. If they have any type of good news, it could move hard to the upside. But the chart looks like poop. So that's a more risky investment. You don't see me in dollar stocks, and there's a reason, because they're volatile. There's that trading chick girl who talks about Eve, whatever it was, FRM, forget it. Let's go to the next question, please. MVIS, no one's asked yet. Yeah, and you're not late. Let's get to more questions. So Microvision, it's probably in the, $6 range, Microvision. Oh, no, wrong stock. Okay, so let me look at Microvision. We're at $15. We were as high as $26. Let's see first how many people are carrying baggage. A lot of people carrying baggage, but there are some people in profit. And the people carrying baggage don't look like they've been selling because they're probably waiting for it to go back to $20. Now, the question you're asking, will Microvision go back to $20? Well, let's look. Okay, right now, volume has absolutely been dead dating back till, you have to go back to like April 23rd, April 24th, April 25th, but that was also when it was peaking at $26. So there must have been news there. Let me just give a look real quick. Yeah, you have to watch this one carefully. You have two things. If it goes down, it will go down to the $13 range. So Microvision, the downside is about 15% to the downside. Your upside potential will probably be about 40%. So MVIS, I look at the chart. If it goes down and you say the market's bearish and it goes down, you're going to lose 15%. If it goes good and it's bullish, MVIS, I can see a 40% gain. Now we're talking about stock only. Okay, so I'm telling you, I'm sharing what I see. So please, as an example, look at MVIS, look at the chart. You'll see, draw lines around the bottom, draw a line at the top. You'll see where the resistance is. Now, resistance, you guys hear people talking about it. It means when a stock hits a certain level, there's resistance, meaning when it hits this level, people want to sell. They think $15 is over, whatever it is, $20 is too much for the stock. They want to push it down. So there's certain resistance levels. If you see your stock can't pass a certain level, then every time it gets to that level, you know to sell it because they'll push it back down. It's called the head and shoulders effect. It goes to the top, head, it goes back to the shoulders, down, up to top, down, up, down, All right, let's go to the next question, please. I'm almost out of water. SRNE. Yes, we've seen the movement today. Unfortunately, 7 is a resistance level for that company. I think it went as high as $7.25. I'd probably guess it closed around $7.06. So let's see where we are. Maybe even $7, right? Because the market threw up on itself at the end of the day. The point was, there was demand there, and SRNE. Okay, Sorrentino, I like it. Okay, 687. So yeah, there was demand there. They pushed it up to 725. So I don't know how much you paid for these. First of all, the good news is your strike, it doesn't expire this Friday. It expires next Friday. So what could we see by next Friday? You want a price target? It could go as high as $8 and 6 cents. So it could go as high as $8.06. Let's just see where it is right now. Your option expires next week, 10 days. I might as well give you, okay, it's like 30 cents, right? Exactly 30 cents. Went from 28 to 50. So the fact that it went from 28 cents to 50 cents, there was a little more buying. I think you're going to get over 50 cents. So right now it is 30 cents. So I'm telling you, I think you'll get over 50 cents. So what would I do? Say you're down, right? Say you're down whatever percent. It's now at $30 per contract. I think you could sell it at $50 per contract. What does that mean? It means it'll go up 66%. So whatever you're down, say you're down 40%, buy 2 more contracts, buy 4 more contracts. If I'm correct about it, and the stock goes back to $7.50 or 60 cents, even more than that, right? You're going to make good profit. Your timetable is perfect on that. I like 2 weeks out. If it was already, today was Thursday or Friday of this week, I would not say, look at your next week options. I would say go out another week or 2. Okay, always give yourself more time. 5 trading days isn't enough. You need at least 7 trading days for options. That's why you buy out an extra week or 2. OXY. Oh, is that the stock that got hit like really hard not too long ago? I'm going to look at it real quick. OXY, Occidental. I don't know if it's the one that got hit hard. It looks okay. So Occidental, it's a $26 stock right now. The chart looks like it's following the market. I guess Einhorn invested, Ackerman. It seems like other people have either invested or pulled out of this. So I'd probably go with the flow. Whatever these other investors did, how they've adjusted the portfolio, if they sold OXY, I would be selling. I don't know the stock, so there are very smart people there. Let me just look at the 3-month. The 3-month chart looks terrible. Just so everybody knows, it looks like this. Then there's a little gully. It actually looks like an M. So I've got to go with the chart and the pattern and say that an M follows through. I wouldn't want to be in that one. I'd be in something else. All right, next question, please. FRX. FRX sounds very familiar. FRX. Forest. No, I don't know FRX. Okay, Forest, the 3-month. Okay, the volume looks dead, and it looks dead since February, where it was spiked at 15, and it spiked to 15 in February. Now, if we all remember, January and February, we're at the top or the peak of the market everywhere. So this, yeah, actually looks terrible. Let me look at the 1-month chart. It just looks terrible, this stock. With that said, no, I I don't see it going anywhere. It trades in a range. So the range is $9.90 to about $10.07. So it moves about 20 cents in the last 20 days. All right. It's not going to move anywhere far unless there's some type of catalyst or news. If history repeats itself and it trades within a 10-cent range every day, it would need to have 20 banner days in a row to move $2. So no, that's not a stock I like to be in. That stock doesn't move. I'm not an old person. No offense to old people, but I don't like watching grass grow. Okay. Does the price of materials affect the market? For example, lumber hit an all-time high in price a week or two ago. Okay. Yeah. So, of course, lumber, cotton, raw materials, everything affects the market. There are companies, when copper's been spiking, that's why FCX and Cleveland Cliffs are going up. When steel's been spiking or aluminum, you'll see X goes up. So you have to actually, it's a great question to Google. I'm not that tied into commodities, okay? My father used to own a commodities business one time. So what would I do? As I say, I type in what's the best way to play lumber, what's the best lumber stock if I think prices are going up? And it will tell you. You might play liquid lumber, it might tell you to short liquid lumbers because their materials costs will go up, so they have to sell at a higher price. It might tell you to go long. I don't really know how it affects it, but it's a great question. 2 plug options paid for the rest of the year. Yes, indeed. You guys paid for this over and over again. Real quick, we're coming up with like a lifetime membership kind of thing that I'm thinking about. And if you're still here, that means you really care. So in my lifetime membership, if you sign up, and I don't know what the price is going to be, I'm going to put in a 30-minute private one-on-one session with Matt. So you're in shitty positions or you wanted to get me on the side and talk to me, we're going to put something like that in. I'm not sure how it's going to work out, but I know you guys are like, I pay $349 a week. I'd rather just pay a lump sum money and be done with it. Same way Sirius Satellite Radio did. I have my lifetime membership that I paid $500 for years ago. It must have been like 2001 that I bought it. But for $500, I get lifetime membership, and we're 20 years later. Guess what? It comes out $25 a year, $2 a month. Okay, so there are reasons for that. Have a good night, everybody. Please share this video. I will tweet it out on public Twitter. Share the video. That's how I get out there. YouTube recommends me. Thank you so much. Have a great night, everybody.